Hello everyone, today I want to talk about the euro dollar, about the situation in the chart and how you can spot possible turnaround points for your advantage. So here's a weekly chart. We had that first impulse wave here to the upside, wave number 2 to the downside, number 3. We didn't get to the 100 Fibonacci expansion level to my surprise on that wave, came down number 4 here. And at least in my view, we are still in number 5 now to the upside, despite here the smaller waves to the up and to the downside. But every wave to the downside here actually never got below the low point here of wave number 4. So I think we have a good chance still to march higher here. Target will be then around 138, the 100 Fib expansion, and that will also meet up with that trend line here probably. So I'm bullish right now on the pair. I will look for long trades on retraces here right now. Now let's take a look at the lower time frame. Here we have the euro dollar in a 30-minute time frame right now. You can clearly see that we are in an uptrend right now with higher highs, higher lows, and right now I would look for a retrace back to my buy zone here, which would come starting at the 100 hourly EMA, the red line, down to the former resistance point, which could become support. The orange line here is 200 hourly EMA. Usually that is where my buy zone is. Important to note that you should not go long blindly here. If we come down to the buy zone, you should wait for some strength coming in back into that pair here. So some buyers should show up down here before you go long. If we look back, the recent setup was down here. We got the break of the moving average cluster and the retest. So the pair was stuck a bit here right now in a range. Came up and down. But I had a long signal here when we came back to my buy zone. We got then white momentum candles here, and we got into that trade in the live room before the weekend, and actually then with the gap up we grabbed 88 pips. We did close the trade right after the open here on Sunday because we had then a down gap and we were not sure if we really get a gap close or not, or if the pair wants to get higher again. So we decided just to grab the pips here. As you can see, then we went higher, especially with the FOMC meeting then here. I want to show you some more examples of the break and retest strategy. The purple line is 200 exponential moving average in a 400 chart. That will be the 1600 here in the 30-minute time frame. So if I see a break of that moving average, if it's a significant break and a retest, that is often a turnaround point. That could be the time when we see a change in the trend here. So we got the break here to the upside, retest, and we got a nice move to the upside. If I scroll back, you see here the break to the downside, but we never actually got a retest here, so you could have not gotten in to that short trade here if you used that strategy. So it would have been here short on a move back to that sell zone then here, but that is another strategy. I just want to talk about that break and retest strategy right now. So I scroll back again. Here we saw that spike to the upside, we broke the moving average cluster, and here you see the retest. So we wait then again for some buying coming in, and then you would have been able to get into that nice uptrend here. Scroll back further. Again, same stuff here. Break of the 200 EMA in the forward chart, the 1600 in the 30-minute. You get the break, the retest. You get in here in if you see some weakness with a tight stop just above that high point, and then you can grab the pips here to the downside. Scroll back further. Again, break, retest. You get a nice long signal here. Again, stop just tightly below that low point. Yeah, and you can grab many pips once again to the upside. Here again, break, retest. We got that move to the downside. Yeah, I cannot scroll back further, but you often get also nice bounces then of the 200 in the 4-hour chart. As you can see here, a nice bounce of that moving average. And think we got another example down here. So that's really a great strategy if you want to go with the trend and have a nice risk reward ratio, because you get in very early in the trade. As for the targets, you have different options. You could, for instance, say, yeah, if I make twice as much as I risk, then I get out, or you have a hard target using support and resistance in your chart, or you can use a trailing stop. In my charts have an indicator which represents a possible trailing stop. So in that uptrend here, for an example, that would have been the trailing stop for the long trade. So we got here the retest, as I mentioned, then white momentum candle for possible long entry. You put your stop just about 10 pips behind its possible swing low point. We don't know if it's really a low point, but we just assume it is. So that would be the stop. Here would be like the entry, and then you just trail your stop 10 pips behind that indicator. So then you got stopped out here on the breakdown. Yeah, and you look how nice the risk reward ratio is here. So you got in here, that is your stop, about 50 pips, and you make about 350 pips to the upside. So you get seven times more than you risk here. So that is really a nice strategy. We use that often in the room, and if you like it, come visit us in our live trading room. Wish you a great day, and I hopefully see you in the room.